All right, something I've learned today that's very significant. Although I've been using this strategy, I'm still learning how to optimize it. And one thing I've noticed is that we have to be able to determine how deep a pullback can go before it's broken. Before the short bias is broken, how deep can it go? And this happened today. It was the best trade setup that we had, and it was fabulous. Let me show you. Let's read the notes in the middle. And the notes in the middle basically say, this picture demonstrates how deep a pullback can be without breaking the short bias. Notice the moving averages did not cross on the 10,000 and 5,000 tick chart. We're going to look at that. Okay, on the 2,000 tick chart, price pulled back to the danger zone, but to the maximum of the 200 EMA. Okay, on the 1,000 tick chart, everything except the 50 EMA had crossed the 200 EMA. In other words, not everything crossed the 200 EMA. Now let's take a look at one at a time. Rule 1, we do not want on a pullback. We're shorting right here. We're getting ready for a short idea. We're waiting for a trend line break. We're waiting for price to pull back, create a trend line. And how deep can it pull back before we should no longer try to short it? On the 10,000 tick chart, clearly this is still shortable. It pulls back to the caution zone only between the 20 and the 50 EMA and breaks the trend line. We don't want the 20 to cross over the 50. That would be too strong of a pullback going in the opposite direction. On the 10,000 tick chart, we don't want the moving averages to cross one another when it pulls back. Okay? And on the 5,000, that's the same rule. The same rule, except this time it pulled back deeper into the danger zone, which is between the 50 EMA and the 200 EMA. However, notice the moving averages did not cross one another. The trend line was created right here and it was broken. Now, what about the lower time charts? What should it look like on the 2000 tick chart when all this is taking place? Well, nothing should go above the 200 EMA. The 200 EMA is right here. Now, we did get a what's called a buy signal, where it's a weak buy signal when price goes over the 20 and the 50. Price jumped up over both of these moving averages, the 20 and the 50 EMA, but it wasn't over top of the 200, so it was not a stronger buy signal. That can signify a change of direction. Now, we're watching all of these at the same time. We're looking at the 10,000 and the 5,000, and we're keeping an eye on it. Because if things go too deep and these moving averages cross one another over here on these time charts, then we're going to be in bigger trouble, okay? So right now, this is a picture-perfect pullback to where we can still do the short. Now, we're noticing on the 2,000 tick chart, price had pulled back all the way to the 200 EMA right here. There's a double trend line break. There's an accelerated trend line that broke at the top, which was the best entrance. There was another trend line break right here, which was the secondary entrance, or a more of a confirmation entrance. Okay. Now, what does it look like on our lowest time chart? The one that we're really going to enter in the details. Well, it almost looks like a reversal. It almost looks like a time to consider going long. And if we were only using this chart, we may want to go long. But because we use higher time charts, because we know what's happening on the day chart, because we know where the drawn liquidity are, we're looking at Fibonacci levels. As a matter of fact, this pullback was to a 50% of the drop down. That was another consideration. This pullback was 50% of the drop on this side. Fibonacci perfect. But I want to point out the 1,000 tick chart looks like it's on a buy. Now, everything had crossed over the 200, which gives us a very strong buy signal. Everything crossed over except the 50 EMA. By the time the 50 EMA got up over there, we were already pulling back to the caution zone between the 20 and 50. Price had already pulled back, didn't give the 50 a chance to cross, and it reversed. Now, in this case, this is the most ideal and perfect scenario that demonstrates how deep something can go and still work. I still have to learn and continue to watch and observe what happens when price goes deeper. And when is my cutoff, and when do I decide to not take the trade short anymore? I know for sure that when the 50 and the 20 cross on the higher time charts, that this over here is probably so deep that it definitely is looking for buy signals. You're looking for buy signals when it goes that deep. So it's all in the eye of the beholder, and it's all in the discretion of the trader where the cutoffs are going to be in your own personal taste, desire, and risk management and your risk appetite. But for me, I hope that I can isolate this picture perfect right here, so that this is what I'm looking for. In other words, it's possible that the rule could be, if everything goes over the top of the 200 on the 1000 tick chart, it's going to be extremely dangerous, and possibly it's a reversal, especially if you get across over the top of the 200 on the 2000 tick chart as well. Okay, so if these two cross over the 200 moving average, it's going to, you might as well forget about it. It's too deep. That means that it's so deep that, you know, it's very dangerous. Now, depending on the speed and how fast things pull back, you could literally see price pull back to the 200 moving average into the danger zone on the 10,000 tick chart here, pull all the way back here and snap back so fast that the moving averages still do not cross one another. The key to this whole thing is we're trying to stay in the momentum direction, and when these moving averages cross one another, the momentum has changed. Okay, if we can keep the momentum on the 5,000 and the 10,000 tick chart going the same direction in the same speed without breaking the moving averages, that's a higher probability change. That's a high probability trade opportunity. Okay, so I'm working all this out in my mind right now. I don't know all the answers to what if this and what if that. We just have to take one step, one building block, one experience at a time, and build on it to where we have concrete and solid understanding and just immovable rules on this particular trading strategy, which I'm still developing at this moment. I still don't have it all figured out, but we're learning little by little on how to perceive and understand price action when it comes to the different time charts and how the moving averages should behave, and what we can expect if price is going to go favorably in our bias direction. All right, we'll see you in the next video, Lord willing. Peace.